That holiday in the US today, what's that meant for trading volumes on the JSE? Because right towards the end, we did have a dip into the negative, back into positive again. It looks like there was a little bit of volatility towards the close.
There was. I mean, we opened relatively high, about 200 points, 150 points up. Went nowhere. It really went sideways, a bit of a drift down. And then, as you said, at 4 o'clock, suddenly the market shed about 150 or so points. And then pretty much regained it. And when I left my desk about 10 or so minutes ago, we were back at where we'd been at 4 o'clock, just after the close. And very, very low volumes, 5.6 billion traded on the day. Normally we would look for 10 to 11 billion to be an average sort of day. And that 4 o'clock sell-off, nothing seems to have triggered it. There was no data flows happening, nothing out there, except the only thing that was happening and which we were keeping an eye on was an announcement from the COSATU and its affiliates that the strike was going to be called off, but that, if anything, should have been a market positive, not market selling.
Yeah, so 4 p.m, perhaps tea time for market traders. It came back at 4:30. I'm just looking at the gains we saw on Friday. Of course, we were up by 1/3%. Would you have expected, just given the gains we saw on the Dow Jones on Friday, given the better than expected jobs data, although it was still quite negative, would you have expected a better performance today on the JSE?
I think I would have liked a better performance, and I think if America had been open, we might have done a better. A couple of things counting against it. We did a lot of that move in the last hour on Friday when that initial bit of jobs data came out initially at 2:30. More good data came 4 o'clock our time on Friday. So we traded off, we did a good Friday there. And then today some big counters, BHP Billiton and Standard Bank were both ex-dividend, and that weighs a bit on the index as well. Collectively they were about 1% to 1.5% each going ex-div. So although they were red in rands and cents, in terms of actual, where if you were net from Friday, you were marginally down. So I think that took some of the gloss off. But certainly I think to the question, if America had been open today, I think we could have had a better day in the markets.
The gold counters really leading the gains today. We had Goldfields up 2.4%, Harmony up 2.3%, Anglo Gold Ashanti up by 1.6%. And that's despite the gold price not really doing anything since Friday, because of course we have had risk back on since Friday and gold hovering just below $1,250 an ounce.
Yeah, gold was an interesting one. I asked one of my dealers and he chuckles and says, it's everyone closing their shorts is putting some pressure on it. But it was certainly more than that. I think the expectation is that gold is holding. Rand hit the 720, went through it but kind of came back, and that 720 level on the Rand, which has held very tight for much of this year, seems to have held. And the expectation is that gold's going to move on to new highs. The Rand's going to go back to the 730s, 40s, maybe 50s and 70s, and that's going to be good for the Rand gold price. So some people getting in ahead of that information, trying to position themselves for when, and let's be honest, if those two eventualities happen.
Of course, we had some negative news out from Northern Platinum. That's that the strike has started at a Zondereinde mine. But of course, I think this pretty much was expected by the market because it's been on the cards for a while, hasn't it?
Yeah, it was very much expected. It's a large amount of their workforce, although I think 80% of the workforce, but only 8 million odd rand a day that they're missing. And you know, companies are really in a tough position here. We've seen it with the government as well. The demands are fairly onerous in terms of where inflation is. Workers are saying we need ahead of inflation increases. You know, there's inequalities and the like we've still got to catch up on. And the companies are saying, you know, our costs are really struggling. We've got electricity costs really coming through at double digit, and they're really trying to put a lid on labour, but I think they're finding that the expectations from labour very, very high.
WBHO out with results this morning, 9% rise in full year earnings. Also a bit of caution in the commentary from that company, which is pretty much expected from all of the construction sector at this stage.
Yeah, construction really having a tough time of it. The contrarian says that when things are this bad and everyone's telling you not to buy, you should be out there buying. My response to that is sure, it takes courage. The Wilson Bailey Homes Overcon, the numbers were, I think, maybe a smidgen ahead of what we would have expected. The one really good glimmer there was their margins up from, I think if I remember correctly, 7.1 to 8.6. That's quite a jump. Their big peers, Moe and Roberts, Group 5 and the like, are sitting on margins in the low to mid 5%. Nice tasty margin, but their order book down, their forward-looking statements into the next financial year, the year 2011, they're saying very, very tough out there. They're expecting it to remain tough out there. I'm not sure that we're going to see construction stocks moving anytime soon, certainly not this year.
Of course, we had AVI, shares up quite firmly this morning. I'm not quite sure what they closed at yet. It reports a 6% rise in full year earnings, which didn't seem very special. What was special was the dividend of 75 cents, and that came on top of the final dividend of 61 cents. And this ties in with what we've seen from a growing number of companies, Simon, where we've had dividends reinstated, we have had dividends increased. It seems that companies have some cash to pay out. MTN lifting its dividend profile. We had Sun International reinstating its dividend, Anglo American reinstating its dividend, and now this special dividend. Do you think that was what pushed that share price higher this morning?
Absolutely, I think it was. We also had Suntime, I think it was last week, the week before, with a R5 special dividend. And what's that telling us? I mean, what it tells us is that A, they've got a strong enough balance sheet so they can afford the cash out. And that's important, because a year ago, even if you had a strong balance sheet, you sat on that cash. You didn't give it to anybody. More than that, it's telling us that they can also, they've got some visibility going forward. And they're saying, you know what, it's tough out there, but the worst is behind us. We can survive it. We can give some money back to shareholders. And I think shareholders are greatly appreciating it, because the market this year as a whole, pretty much flat, so those dividends are becoming extra important. You know, when your market's up 20-25%, 1 or 2% on dividends is not exciting. When your market's gone sideways, that 1 or 2% is significant.